Why you shouldn't invest in the stock market. So you've been learning about personal finance and investing and you want to get started. And you've been told that the easiest way to start investing is through the stock market. You feel like you need to start investing fast because if you don't, your money sitting in the bank account will be a victim to inflation and you'd rather have your cash sitting in an investment account racking those sweet dividends. But in this video, we'll explain why in certain situations, you'd be better off not investing in the stock market and doing something else instead. No, it's not investing in real estate or Bitcoin. It's something that can give you much better returns if you do it right. If you're already a seasoned investor, you can go ahead and skip this video if you want. But I think this principle applies to everyone and you can still get some good ideas from this video if you stay till the end. So let's get into it. Cha-ching! Before we go into why you shouldn't buy stocks, let's get this straight. We think that investing in the stock market is one of the best ways to grow your money. The stock market allows average people to build their wealth and is one of the best wealth building tools available to us. But in this video, we want to talk about why people shouldn't actively invest in stocks by picking and choosing which stocks to buy. If you really want to invest your money in the stock market, we'll give you another suggestion that you don't have to pick and buy your own stocks but still reap the same benefits. So in 2020, the number of people who have been investing in the stock market has been steadily increasing. This could be because of a number of reasons. One of them being the technology that allows us to access the stock market is reaching maturity now. So it's very easy for people to get on their phone, download an app, and start investing in the stock market with just $1. Some experts think that because of the pandemic, everyone is stuck at home and they're bored, so they turn to the stock market to get a kick. When you pair the boredom of staying at home, the desire to make money overnight, and the technology that allows you to do something like this, you get a mix that could lead to very bad outcomes. So why do we think that most people shouldn't invest in the stock market? Well, the main reason is because investing in itself is a skill. It's something that takes knowledge, time, and practice to get good at. Most people who pick and buy stocks do it because of the fear of missing out, or FOMO. And they do it without the knowledge or skills that make it worth their time or money. Yes, there are people who invest their money in the stock market successfully without knowing what they're doing, but their success is heavily based on luck, which may not apply to all of us. And yes, you can technically outsource your investing to a skilled fund manager through buying something like an index fund, but more on this later. I'll give you an example from my own experience. I started picking and buying my own stocks in April. Before that, Emir and I were talking about individual stocks and I was excited to start. The thing is, I've read multiple books about stock market investing, watched countless of videos and book summaries, but I still don't know enough to be a successful stock investor. Yes, I've bought some individual stocks and they've been successful so far, but I still consider myself a speculator instead of investor at this time because there's still a lot that I don't know. After going through all these books and videos, I decided that picking and buying individual stocks or actively investing was not for me. It wasn't worth it for me because it took too much of my time and energy when I had to understand the financials, read charts, and keep up to date with finance news when I could be using my time to do other things that I'm good at, like making YouTube videos. If you want to be an active stock investor, meaning you want to pick and buy your own individual stocks, you have to understand the fundamental analysis, like how the business makes money, how much revenue is it bringing every year, how much their profit margin is, and you have to understand the technical analysis, like reading charts and patterns. Most importantly, you have to understand how you behave and the risks that you're willing to take. So how do you know if you should buy and pick individual stocks? To answer this question, I have to give you another example. Now, Emir is passionate about finance and stock market investing. He stays up to date with finance news, he reads charts, and he spends a lot of time learning about stock market investing. Me, on the other hand, I'm not that interested in stock charts. So if you want to be an active stock investor, you really have to be a nerd about it. You have to geek out about financial reports and charts, because the people who become successful stock investors spend more time on these things than the average person. Okay, so if you're not extremely passionate about stock investing, but you still want to reap the benefits of it, what should you do? Most people would say invest in an index fund or an ETF, which are basically a basket of stocks picked for you and managed for you by a fund manager. And in exchange for all that time and energy that fund manager puts into picking and managing the best stocks, you pay them a small fee. That's a fair trade. It's like outsourcing your decision to someone who you think is better equipped at picking and managing your stocks for you, because you don't want to spend all that time and energy picking the right stock. Before we recommend investing in index funds or ETAs, we have to go through this scenario. Let's say you make 3,000 ringgit every month, and after paying all your bills, your rent, your utilities, your food, your transport, you're left with 500 ringgit of disposable income. You can either take that 500 ringgit, invest it in an index fund, or you could take that 500 ringgit and invest it in yourself to increase your income. If your investment is successful and you upskill yourself, you might get a promotion or a new job. And let's say you now make 4,000 ringgit every month. Assuming that you keep your lifestyle and spending the same, now you have an extra 1,500 ringgit to spend instead of just the 500 ringgit. So you've made a significant return on investment in a relatively short amount of time. Take this principle and keep repeating it until you're earning the salary that you want. I experienced this firsthand when I spent about 500 ringgit on a digital marketing course when I was 19. And till this day, that 500 ringgit has given me more than 1,000% returns. And from that lesson, I learned that I could spend on something that could help me increase my income. So if you're not making as much money as you want, invest in your skills and knowledge first. I know that investing in yourself has become a cliche now, but it's true. The best bet you can make is not a bet in the stock market, but in yourself. We recommend upgrading your skills by investing in books, courses, or even equipment that can help you increase your income. But there's a catch to this. Something that I personally realize is that you can only buy so many books, courses, and equipment. But the problem is, you can't just spend money and expect to get rich or increase your income. You have to spend something more important, which is time and energy. There's only so much money that you can spend when it comes to investing in yourself. But when it comes down to it, you have to put in the work to use those resources that you've purchased so that you can increase your income. So now this leads me to investing in index funds or ETFs. Once you've spent the money you need to increase your income, whether it's buying a new laptop so that you're more productive, or buying a new course so that you have better skills, and you have extra money to spend, then you can start investing in an index fund or ETF. We recommend investing in an index fund only if you have excess money after spending on the other things that should come first. We have a video on that, so check it out. You have to cover your emergency fund and all those other things first. Investing is like a level 3 game, and increasing your income is like level 2, while having an emergency fund is like level 1. Most people just jump straight away to investing at level 3 because they think that they can get rich by just throwing their money into an investment account. But without a significant amount of money, your investments are going to take a long time to reach an amount that you can comfortably live off. Instead, you can increase your income first so that you have more money and you can invest more consistently. So if you have excess money that you don't plan to use within the next 6 months, then you can start thinking about investing in an index fund or an ETF to grow your money. There are a lot of ETFs and index funds out there, but we recommend using Stashaway to do all the hard work for you. Stashaway is a robo-advisor investment app that picks the best ETFs and index funds for you from all over the world. They help you manage your portfolio, they have a cool interactive app, and they even have an academy that teaches you about investing. And the best part is, they take less than 1% of your portfolio as their management fees. Remember how we talked about if you don't want to pick and buy individual stocks, you can outsource that task? Well, this is exactly what Stashaway does for their users. They do all the hard work to invest your money so that you have free time and energy to spend on things that you are passionate about. They're transparent, user-friendly, and we wouldn't recommend them unless we ourselves use them. and we do. I've been investing consistently with Stashaway since March this year, and it's been great so far. I don't have to be consistently checking the news or the charts. I can just sit back and let them do the work for me while I focus on the things that I'm good at. If you want to go deeper on the 5 places that your money should go to when you get paid, watch this video on how successful people spend their money. If you have extra money to invest, check out this video about active versus passive investing to get a better understanding about the differences between the two so that you can choose which is more suitable for you. Let us know down in the comments, would you rather pick individual stocks or let someone else do the hard work for you? That's it for me in this video, and I'll see you in the next one.